Hello, welcome to FountainFX on Friday the 13th of December 2013. We're looking at the US dollar yen. We took a look at it yesterday and we were looking at the opportunity to enter a short. Now, as you can see today, that opportunity hasn't set up. We were waiting for this trend line, this upward trend line, to be broken. So it's actually quite interesting. We were looking at confirmation in either direction. Is it going to break up or is it going to break down in terms of price? Now, the one thing that I did say was when we actually drew this resistance line and then we drew the trend line, I pointed out that this was an ascending triangle, and typically what it actually means is that price continues in an uptrend from this area. However, we had some conflicting information because the MACD was actually declining. The upwards momentum was declining. It's also at a peak, and the moving averages were starting to cross over at this point up here on the very top of the MACD. So it was giving the indication or the inclination that price was potentially going to turn and fall. We'd had a top hit here, pulled back, and then we had another top, created a double top. However, when the price hit here, it didn't come back down into the previous neckline, the previous low. It continued up. So that was a good indication that actually price and momentum was still pushing up. So based on that, we're looking at a long. The trend lines are continuing to push up, so it's about going with the trend. What I would say is wait for a pullback into this area of resistance before you do go long. Look for confirmation. Ideally, what we should be looking for is that when it pulls back, if it creates a doji formation, then it shows indecision at this area of resistance, showing that it's forming an area of support, and so therefore it's increasing the probability that price will then rise from there. You've always got a degree of caution because the market is unpredictable at times. We're coming into Christmas period, so things are going to slacken off, and therefore volatility should increase. At the same time, don't be surprised if the market doesn't push above areas of resistance only to turn and pull price all the way back down. And in hindsight, you'd then say, oh well, look, therefore the MACD was a clear divergence, and it was showing that all the time. But we're at this precise moment in time where we're looking at whether price is going to continue up, or if it is just a fake out and price is pushed above this area of resistance only to pull back. So it's still a case of wait and see. It's more important for you to keep your money in your bank than to try and risk it on a trade that's just not very clear. And thank you very much for trading with FountainFX.